Okay, here's the premium version. Now I've got a few things hidden on this because I don't want to overwhelm it when you first look at it. So let's just focus on a few things. All right, let's start with the devil's edge. All right, so now, as I've said before, the devil's edge is a turbocharged MACD Bollinger Band indicator, because what we've done now, as you recall from the prior version, we're combining all three of those indicators. So we have the yellow dots representing the TTM squeeze, right? Bollinger Bands are inside the Keltner channel, lack of volatility. And well, talk about a great example. Look right here. Right, just that's don't want to trade that. You want to stay out of it. Just let it come and go. Right, completely. So the reason I have these bolded in yellow, because I don't want to trade here. Right, I want to know that that's a squeeze. I want to know when I'm in low volatility environment. A couple of reasons. One, I don't want to enter there, but it's kind of a heads up that volatility could come out of that low volatility, as that tends to be how the market reacts. The other thing you'll notice here, and this is, I'm just going to use these extremes as good examples. Look at the separation. Look how much more cleanly, it's better coding, and again, just rather than something that's free off the internet. This is a premium indicator, so you can really see the separation here as we get up here, and this is just a great example, as we get beyond 4 times the average true range of a 55 period. We're well beyond this, but look at the separation here. So this is creating just all sorts of energy and pressure that is likely to release. I mean, now of course, right, you never know for sure, but we can look back, right? Find a time where it doesn't retrace, right? Particularly down at these kind of smaller tick levels, right? It's always comes back to the Bollinger Bands. Now it can stay there for extended periods of time, but sooner or later we're back in. So that's the premise here, because this is a counter trend approach. Now, when we look at some of our other templates, and there are different ways to use the devil's edge, but this one is particularly effective for this counter trend approach to, it's not quite a scalp, although there's a scalp feature to it. I mean, you can get it. I mean, you can take some of these runs are pretty good here. So swing, if you can get swing low here, you can get the lower band to the upper band. I mean, there's almost 100 ticks. Right? So there is definitely potential here for significant profitability here. But when you're first going into these trades, your initial target, what you're looking for, is a return to the median line or the center line. Right, so here, right, another good one, right? So if you're here and you got all the way, here's your first target. That's 20, well, call it 25 ticks, and down here you got 60 ticks. Right, RTY right on a 144. That's a nice little trade and very low risk. Right, it's very low risk. Now, see, the key is you got to wait until it comes back into the Bollinger Bands. Right, so we're up trending. Right here, this is really the mirror image of how this is being used more traditionally. It's the break outside of the Bollinger Bands, right? This is creating that long sustained trend as we hold outside of the Bollinger Bands. Nice, big, huge trend. Once we get up here and then we start to roll over, we've gone from 4 times the ATR on the low side to beyond 4 times on the high side. Again, pressure release. You can see down here, right? We got good separation here. As we're coming down here, it's not until right about here, right about this bar here. So if you think about the risk here, so if you're you're right at the IB, so there's 12 ticks, not quite 10 ticks to that pivot. But if you're waiting till we just get inside, it's already, the momentum should be in your favor. If not, you'd be quick to get out. Right? You're going to take stops with this approach, right? But test it. What you'll find is that the winners will far outpace the losers, and your losers are going to be anywhere from 12 to 16 ticks. Your winners are going to be substantially higher than that. So the math will work for you over time, but it does take a little practice. Now here's a good one. Look at the separation here. Look at the separation here. How far we get from the Bollinger Band here. Now it's not reflected as much in the price here. Right, you don't see this massive swing like we did before, but look at the separation. That is absolutely, and we got in between that pocket. That is absolutely, right, we don't get back into here, so you didn't get much. Right, you got 13 ticks to the center line. So there's a good example. If your first target, if your scalp target is 10 ticks, well, you got it here. Now, as it works back here, this might have been a scratch, right, or a small loser, because you didn't get the full thrust of what you were after. Right, you're hoping you pause here and then carry on. right? But we bounce around here, and then all of a sudden we're back up, and then it's back up here again. Again, look at the separation. All right, so what else can I use here? Because if I'm looking here, I'm like, do I take that one? Well, we're outside the bands. We're not quite there. What else can I use to help me identify potential turning points in the market? I mean, all of these, look at the separation. The better the separation, the more pressure is created that needs to release. So all of these, good separation underneath. Well, here's a good one. Let's look at that. Right, so you've got good separation, but you're not at the bands. All right, so do you want that trade? Well, let's look at how we might. Here's the interesting one. So look at this one. We're at the IB low, right? Heads up, IB low. So we're at the IB low, and we don't have great separation. So there has to be something else there to help you identify that as a trade. Now it's 9:57, so the IB is not set yet. This looks like that's the pivot that sets the IB. There's 10. Yeah. So these look like the two pivots. If we look at the entire day, these are the two pivots that set the IB. All right, so you're right here. It's not the IB yet. We don't know that that's the IB. You don't have great separation, but so there's got to be something else there to help you take that trade. Because as I'm showing it to you here, with only two requirements, that the devil's edge, the MACD dots are outside of the Bollinger Bands. We have that criterion met. We are in the space between 3 and 4. Do I take that trade? Well, it turns out to be a nice winner, right? But how do you distinguish, right? What else can I use to help me there? Well, that's where we're going to start to look at some of the premium tools that we're using here. Now, first would be on any chart, right? There's not a chart I have that wouldn't have the auto fibs on it because of the measured move that we see that dominates the market. Now, if you're not familiar with that, well, if you're a member watching this, right, it's been drilled into your head. But if you're new, if you're watching this on YouTube or you're new to our work, well, the measured move is the algorithm that dominates the market. So we certainly want to pay attention to 50s and golden zones. So the auto fibs that are on the edge are always the next set of 50s and golden zone that are coming. So you can't go back in history and look at them. That's where we have to use the measured move indicator. But just so you understand, so here this is a golden zone from a swing low, swing high. It's actually easier to show you here on the way up. So if this starts to go up, here's the 50, and we've got two golden zones here, and it looks like they're coming from. Here, if we just draw it up here, it looks like this is one of them here. So if I go here, yeah, that's one of them. So this is your next golden zone coming up, right? So here's our with a target down there, but there's two of them there. So it looks like it's also picking up from, it looks like it's right there. Well, it looks like there it is. It's right on that one here. So there's the second one. So you've got that. That's just what you're looking for. That's just the kind of cluster that would tell you if we get up here and the conditions are right, heads up. Right? Same thing down here. You got a cluster of golden zones here. So those are things you don't want to miss. But so if we want to look back, well, how do we do historically? We got to go to the measured move indicator because that will track every completed measured move along the way. So if I turn that on, here, we'll go back to the beginning of the day. All right, so a couple of good examples right here, right off the bat. Now, this is what we were just looking at this pivot. So you look here and you go, okay, right? Remember, this was the example we were just looking at. Okay, I've got some of the criteria here. Well, I'm between the 3 and the 4, right? Even though the IB shows there, you don't know. The IB is not set yet, so you don't know. You're not trading off the IB just yet. But down here, I don't have great separation. Do I take that trade? Well, look what's right there. It's probably hard for you to see, but that yellow line and this dotted line, that's the 618, that's the 65. So you are literally dropping right to a golden zone. That's 618 to the tick. So does that give you a little more confidence to take that trade? Right? I would think so. Same thing right here. Well, you got a couple of them here. So we're coming in. First thing we hit is a 50. Now, do I want this? Well, I don't have. So the requirement here is that we have to have the MACD dots outside the Bollinger Band. So here, well, you might take it just off of the 50, ends up getting to and through target, but the conditions for this particular setup are not there. So let's. I digress a little bit here. So do we have one here where I'm outside, but look where I am in the spacing here. I'm not to the 3 ATR. So even though I've got this is one you let go. It ends up being a nice winner, but right? I mean, you're going to find them that would have been winners, but woulda, shoulda, coulda. We're not going to get every one of these. We don't need to get every one of these. Now we come down here again. I don't get great separation. I do get outside, but I'm right at a 618, right at a golden zone. Boom, up we go. So let's go to the next one. Now here, this comes with experience. Now, do I want to take this trade? Well, I'm not to the 3-4 bands, right? I'm not there yet, but I've got good separation down here in the MACD. Now, looking at the time, it's not bad, right? It's about 11:50-ish. So I've got a little separation here, but I'm right at another golden zone, right? Do I take that trade? That's up to the individual, right? What kind of day are you having? Or, do you have a little cushion to be a little bit more aggressive? It ends up being a decent trade. It doesn't, but look, here we go right into a squeeze. So even if you took this, what you're hoping for when you take that trade is that we're going up here, right? If we waffle in here, the longer you're in the market, the more ill at ease you become. You're in a squeeze. So this is one you probably just bail on, right? And wait for a better setup. Now here you've got one, right? We're not outside, so we don't have the conditions met. We get another measured move. Right, but we don't have our conditions. Now, here's a decent one. Here, we don't have great separation, but I'm in the outer bands here. This measured move, it looks like this one has just completed. So it looks like this one is completing right here. Here's the target. We get up here. Now, am I taking that trade? Right, you're in the 3-4. We get a little separation. Boy, nice trade. Right, you might have been a little bit ill at ease, right? If you didn't have the bands here, because you're like, oh man, we're off. Here we go. We're going. All right, up, down we come. Right, and that one makes the full loop all the way down. Then now look here, we get good separation here. I'm not to the lower bands, but there's the IB high, and there's a 50 and a golden zone there. Do you take that trade? Well, those are judgment calls. If this is all you've got right now, you've got, well, let's just say for the sake of discussion, you've got the devil's edge. Everything else here that's on the chart is, well, if I take this off, you've got the devil's edge. Right? So you made that investment. Everything else that's on the chart currently is native to Ninja, or you were able to download it. And then I've got my auto fibs running here, so maybe you don't even have the auto fibs, right? So maybe you're just going to do these one at a time, and you're gonna draw them and go, okay, well there's one, right? So am I going to take that trade here? Well, it's right there. Yeah, that's an alternative, right? If you don't have the measured move indicator and the auto fibs, well, you can draw them one at a time, right? That may be how you start, and then eventually, after some profitability, then you make the investment into the auto fibs, measured move, and you get the full suite of power tools here to help you trade this profitably. Because if you stick with this, you'll find this will surprise you how profitable it is. Right, you're gonna take stops, right? Let's be clear about that. You're gonna trade stops, but if you are disciplined and you focus on the best entries here, where we have all the conditions met, you're gonna do very well with this. Now, let's add the final piece to this to really sweeten it. So we've got the measured moves on. I'm gonna take those off just for this example. But let's now, I've got it hidden here, so let me go into the indicators. Well, here we've got one of our tools from our order flow suite, where I've got the delta volume. All right, so while there are a lot of features here, and if you're not familiar with what we're looking at here, if you don't understand what delta volume is, then I encourage you to watch the video that was posted. It'll be on YouTube on the playlist for the order flow suite, and that will give you more insight into what's actually happening here with the delta volume. But we want to look at total volume, the delta volume. I'm going to have it paint the bars. And I want to look for imbalances, where I get an imbalance between the buyers and the seller. Let's get it visible. So bear with me, I hit it just so it didn't overwhelm the chart, because this can be a lot when you're first getting used to it, to see all of this content on the chart. Okay, so let me take off the measured moves here. So what you'll note here, every time you see one of these squares, we have an imbalance between buyers and sellers, bids and offers. So again, I would strongly encourage you to go watch that video that deals with the individual components of the order flow tool suite here. What I've done here is I've pulled out one of the tools in the order flow suite, which I just showed you, the delta volume waves, so I can look and see when I get to these pivots what's going on intra-bar in the battle between buyers and sellers. Now additionally, I can put on the Gann swings here to identify each one of these potential pivots. I can put those on if that's helpful, but not requirement. You can put on the waves and the boxes to show you the so who's overwhelming whom here. So sellers clearly in charge, buyers in charge. What we're looking for is those areas here where we have an imbalance. So when I take those, pardon me, when I take the boxes off, the bid volume is blue, will typically be above the bar because it takes more buyers than sellers to push up, so we get a cumulative delta total of this swing of 195. The offers or the sellers will be below the bars. Now, when I get a situation like this or this or this where I have blue or buyers, more bids than offers, and it's underneath the bar, that means I have an imbalance. Buyers are overwhelming sellers here at that pivot. Odds are the market's going to go higher. Same thing up here. Now, here I get a sell imbalance as I do up here. This means even though the price has gone up, at that pivot, sellers are overwhelming buyers, so that's giving me additional insight into what's likely to come, and the market moves down. Same thing up here. So let's put this in context. Now, I'm up here. I'm at the 3-4 band. I get a seller's imbalance here. Sellers are overwhelming buyers as I have separation. That's a must-take trade. Must take. Right? That's every possible condition. The only thing that might be missing here, I'm also at a measured move target to the tick. So look at all the information that I have guiding me into taking that trade very comfortably. All right, that's a trade I would take with a 12 tick stop. It's so clear here. So we've got separation. I'm outside of it. I've just come out of a squeeze and popped up. Now I have nice separation here in the edge. Right? So MACD above the Bollinger Bands. I'm in the 3-4 window, and I've just hit a target. Now, target is not an entry signal, but it certainly is one more piece of evidence that, hey, perhaps that move, if it starts to come back, as we start to come back, that's a trade that I want to take. And so what do we get out of that? So as we hit it on the second bar, right down there, there's 52 ticks, 260 per contract in the RTY. Now look what happens here. So this would be another judgment call. So here's the swing. So we get a perfect measured move. We get the swing. We get the retrace. It goes right to the golden zone. Now look what's happening here. Now down below, I'm not outside the band. So this is a judgment call. I get a perfect retrace to the golden zone, but look what I get here. I get a sell imbalance. So do I take that trade? Do you want to take that trade? Well, with experience, it could be a function of what's going on in the day and what the other markets are doing. But you're literally to the tick into the golden zone, and I get a sell imbalance. Yeah, I'll take that trade. Now, if I've had a bad day and I'm down for the day, I may not. But if I've had a good day and I'm a little more comfortable and I can afford to take a small hit here if I get stopped out, I will take that trade, even though I don't have the conditions here. But that just comes with experience and practice and using this regularly. Let me go back to a different day here. And how about this? We'll let's just change market. So let's go to the YM. Same setup. Give it a second. All right. So here, similar, right? So the RTY and the YM will not always, but so similar price action here. We have the markets go up. Look what we get here. Massive cluster of golden zones. Separation. Right? I don't get an imbalance here. It's not a requirement that you get an imbalance. That's just a sweetener. Right? I don't need this. So I've got the pre-market high is up here, the IB mid. I've got a huge cluster of golden zones. I'm outside the four times the ATR. I've got massive separation. That if you waited all day for that trade, right? There's 150 ticks, right? And we're not even. Well, you go back in here. So let's say you took it until, all right, we went back inside, right there. There's 126 ticks, 630 per contract, and that's you waited all day for the perfect setup. Now, how do you? Well, that's almost perfect. What would make that perfect is that if you had a sell imbalance, but you don't need it. It's not a requirement, right? So here, let me see if I can find one that has everything, right? I don't have an imbalance here, but again, another massive cluster here, 3-4. Series of golden zones, outside separation. Yeah, you take that trade. Here I get very little separation. I'm actually in a squeeze. I come golden zone to the tick. Still gets it. Let me see if here this one. Let me see if I can find a perfect one for you where we get an imbalance and we're outside. I might have to go back a day. Let's go back to a prior day. I'm sure we can find one here. Let's see here. No, this is pretty good. All right, so it's 11:30 in the morning. We've had this swing, deep retrace. Now we don't have a measured move here, so the measured move has already come and gone, right? So as we got up here, we got a few ticks through the golden zone, right? So you know you're waiting here. Do we get outside? Now look, I get a reversal signal here, as in the delta is reversing, so that's the little R for a potential reversal signal there. I get a seller's imbalance as I'm sitting between the 3 and the 4 after separation. That's a must take, right? That's a perfect setup. Perfect trade. What do we get out of that, right? So you're back in here. So let's assume you got the worst fill of the whole cluster. Down here, we come back in, there's 79 ticks. Right? We don't get an imbalance here, but you got great separation. I was trying to find a perfect one. Let's see if I can. Well, let's see here. This is not bad here, where we're getting the push up here. Now note here, we don't no imbalance. Remember, blue is if it's above. That's what you're anticipating. Buyers are the cumulative delta here. The buyers of this move here have stayed in control here. So you would anticipate always the blue, the buyers above the bars. When you get red above the bars, that's the imbalance. Right, so this chops a little bit. We have, you can see it waffling here, waffle, and then eventually we come down. Now, as it starts, we get a series of measured moves. Right, again, I'm kind of combining concepts. Right, there's one, and we get another one here. We get the bigger one. All right, then we get another one. Right, I mean, it's just, once you start watching measured moves, it's just over and over and over. And it's what moves the market, right? As I said, you guys know that I use this term. It's the DNA of the market. It's how the market moves. It's one measured move after the next, right? Now we're down here on the 144 tick, and you'll find that it's so dominant on these smaller tick sizes here. It'll just astonish you. I mean, it's one after the next. Here's one where, another good example here where you're early in the day. I swing. Now I'm back to a 50. I've got a little separation here. Right, so then here's the push outside. I've got a little separation here. Now, do you take that trade? Right. So in this trade here, you don't have an imbalance. You don't need it, but you're outside. You've got this. So what'd you get right there? There's 20 ticks. Let's assume you took that and maybe you got your scalp out. Maybe you got stopped out. Right. So I mean, you're going to take stops. So I don't want to suggest that you're not. You're going to take stops, but again, you'll find that over time, if you trade this throughout the course of the day, right, or maybe you're trading in the morning, an hour in the morning and an hour in the afternoon, it'd be perfectly adequate. You're going to find this all day long in multiple markets. Here's a good one, right? Between the 3-4, beautiful separation, rips it right up. Don't have an imbalance, but you don't need it. It's not a requirement. Now, the other thing to note here is you'll recall, so the center line here, in addition to being the squeeze, that's the vortex underneath. Right, so if I put on the vortex here, as we go red here, that means the signal line has gone underneath. Right, so when we go green, that means the signal line has gone above. So I've shown this before, but if you looked at the Devil's Edge video here, so if I put the vortex on here, I got to find it. If I put that on here, so what you'll see, right? So as we go green here, we stay above. As we go red, so here we go red right here, right as the MACD crosses outside, the vortex goes red. Right here we go green. So the center line is the vortex. That's why you don't need that. Right, and then you're getting the squeeze and then the MACD and the BB. So this is just taking up screen space. Right, that's the advantage of working with the Devil's Edge and not trying to do it piecemeal at a time. And of course, clearly you'll notice the advantage of working with a premium MACD Bollinger Band rather than just a free one, although you're getting similar information. This is just much easier to read, and since separation is what's key here, I certainly would want the tool that lets me see that separation better. So these are just some great examples here. You can any market. The only one that would be not as friendly to these smaller tick sizes is the ES, just because The tick sizes are much bigger, but I've seen it be very effective on a 610, even a 377 in the ES. But for the YM and the RTY, which is where I'd suggest you start, you can stick with a 144. Same with crude or gold. You can be at a 144 or a 233. Finally, let me finish with what my workspace looks like. So to show you the full workspace, I keep the 233, a 440, the 610, and the 987 down here underneath it, because as I'm looking at a trade like this, I want to know what's happening on higher, think of it as higher time frames is essentially what they are. I want to know what's happening here. So for example, if I get a move like this here that might set me up in the 144, and then I start to move down, I want to see, is that following suit here in these other larger time frames here. Let me get that I think get that off there. Okay, so I want to look all the way out to a 9. It's like looking at a 2-minute, a 4-minute, a 5-minute, and a 10-minute. You might think of it that way, and then this would be, down to your smallest one. Think of it as a 1 minute. So maybe 3-minute, 5-minute, 10-minute, 15. It would just kind of conceptually so you understand. Because what you're hoping for, if the 144 gets across the river, as it's called, if you get across the Bollinger Bands, then I want to see if that's reflected is the same in the 233. Now, is the 440 going to make it across? If it is, then I know I've got a strong trend. Is the 610 going to make it across? If it does, I know I've got a solid trend. And then all the way out to the 987, where I can see, well, this is, of course, the end of the day, way back here, the end of the day where we had this, where it's starting to sell off. That's why the 987 is showing you from this pivot here, it's been down, right? So I want to kind of watch those other time frames here. And so all I've done here is just take, if you were to look at it, I've just got a line chart here, right? Because I don't need bars. I actually don't need that. So then I'm just applying the devil's edge underneath and then just screwing it up, because all I want to see is the edge. I just want to see the edge. Because up here, this is the price action I'm concerned about. I don't need to see a chart down here. I just want to see the devil's edge. So that's how I use it. That should give you some things to work on. I strongly encourage you to do some testing with this. Members, or OGs that have all of these tools, you'll find this will be a very nice complement to what you're already doing. I strongly encourage you, test it out in Sim, take a week, see how you feel with it, get comfortable with it. For non-members or those of you that have invested in any of our indicators, this would be a nice thing to consider to augment what you're already doing. I think you'll be surprised at your results. I would encourage you to do a little testing on this. And if you're an edge owner or not an edge owner, then perhaps this is something that would encourage you to take a look at this. We may have probably be some little Black Friday promos coming up soon. So keep an eye on that. But this, I think you'll find this will be an investment that will reward you well. Okay, guys, there you go. Talk to you later.